Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. A watershed moment unfolded in Washington as bipartisan support propelled landmark digital asset legislation toward enactment. The House of Representatives passed the Genius Act, establishing federal oversight for stablecoins, dollar-linked cryptocurrencies designed for real-time payments. This regulatory breakthrough, championed by both Republicans and President Trump, could unlock faster financial infrastructure while legitimizing a $265 billion market, projected to reach $3.7 trillion by 2030. Market reaction was immediate. Total cryptocurrency capitalization surged to $4 trillion, positioning the sector just behind tech giant Nvidia in valuation. This milestone reflects institutional confidence that clear rules will accelerate blockchain integration into mainstream finance, potentially easing historical volatility concerns. Simultaneously, the House enacted the Clarity Act to resolve the long-standing jurisdictional conflict between the SEC and CFTC over digital assets. This market structure legislation categorizes cryptocurrencies using a transaction-based framework, providing developers and enterprises with actionable compliance pathways. The bill survived procedural challenges and democratic attempts to amend it with ethics provisions targeting politicians' crypto holdings. Its passage, alongside a third bill restricting central bank digital currencies, signals a strategic pivot from reactive enforcement to proactive governance. Analysts suggest these frameworks could catalyze trillions in institutional capital, particularly through retirement fund access hinted at by the Trump administration. Amid regulatory tailwinds, Ethereum and XRP led altcoin rallies with double-digit gains. Ether surpassed $3,600 for the first time since January, marking a 40% fortnightly surge, while XRP jumped nearly 20% to yearly highs. Technical analysts attribute this divergence from Bitcoin's consolidation at $120,000 to renewed institutional interest in blockchain utility beyond store-of-value applications. Nasdaq-listed BTC Digital exemplified this shift, announcing full conversion of Bitcoin reserves into Ethereum and a $10 million ETH acquisition strategy. Parallel moves emerged as investment firm SharpLink earmarked $6 billion for Ethereum purchases, with 99.7% of existing holdings already staked, validating proof-of-stake economics amid rising transaction fees. On-chain activity revealed high-stakes portfolio rebalancing. A dormant Bitcoin wallet from the Satoshi era transferred its final $4.8 billion to Galaxy Digital, likely preparing for institutional custody or OTC liquidation. Meanwhile, healthcare firm Semler Scientific expanded its corporate treasury allocation to 4,846 BTC, $570 million, becoming the 14th largest public holder through systematic accumulation funded by equity offerings. Such strategic positioning by traditional enterprises suggests deepening confidence in crypto's role within diversified asset strategies, though quantum computing fears prompted a radical Bitcoin improvement proposal. Developers drafted a soft fork to freeze legacy addresses vulnerable to encryption breaches, including Satoshi Nakamoto's 1.1 million BTC, through phased migration to quantum-resistant wallets. This preemptive measure highlights how technological arms races coexist with market maturation. Infrastructure scalability emerged as another critical theme. ENB Chain unveiled plans to support 5,000 decentralized exchange swaps per second by late 2025, a 50 times throughput increase via Rust-based clients and optimized StateDB architecture. The upgrade targets seamless user experiences during volatility spikes, contrasting with current network congestion during rallies. Similarly, Ethereum developers proposed slashing block times from 12 to 6 seconds in 2026's Glamsterdam upgrade, aiming to enhance data freshness for DeFi applications. These technical roadmaps underscore how Layer 1 ecosystems compete on performance as adoption grows. Innovation extended to token distribution models with BitGEX listing of Coinstar, an asset repackaging platform converting diverse inputs like NFTs and stablecoins into standardized star coins. This approach potentially streamlines user acquisition for Web3 projects while introducing novel interoperability mechanics. Exchange-level experimentation coincided with venture capital resurgence. CEX.io reported $16.5 billion in crypto funding during 2025's first half. nearing annual records as tokenized traditional assets gained traction. Bitwise CIO Matt Hogan noted institutional recognition of this multi-trillion-dollar opportunity, particularly amid shifting regulatory attitudes toward real-world asset tokenization. Finally, Bitcoin mining demonstrated convergence with energy infrastructure. Hut 8 secured a 5-year capacity contract with Ontario's grid operator to supply 310 megawatts during peak demand, creating predictable revenue streams while addressing provincial electricity shortfalls projected at 5.8 gigawatts by 2030. Such symbiotic partnerships may redefine mining's economic model beyond pure block rewards, especially following American Bitcoin Corp's $220 million raise for expansion. These developments collectively paint a landscape where regulatory clarity, institutional participation, and technical refinement fuel holistic ecosystem growth, though quantum threats and ethical oversight debates remind observers that maturation brings complex challenges alongside opportunities. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.